Meanwhile, there's a new report that shows that there are signs of slowdown in the commercial real estate market here in the U.S. According to Real Capital Analytics, commercial property investment activity was down 25% last month compared to a year earlier, dragged down by retail. Joining us right now is Joel Marcus. He is the founder and CEO of Alexandria Real Estate Equities. Joel, it's good to have you on the program. Thanks so much for joining us.
It's a pleasure to be here.
Yeah, the last time we talked with you, we were talking a lot about health care. Because, of course, your commercial property houses health care. What are you seeing in the broader market? Because in the last 2 weeks, the main discussion point with regard to the economy has been the weakness in retail and the weakness in malls.
Well, a number of sectors, Maria, have in fact slowed down. There are reports that self-storage has seen a decline in demand. Certainly retail is under assault by the internet. And I think a number of industrial groups have reported a slowdown as well as a large supply coming on board. But I think we at Alexandria feel very lucky that we're in a very unique niche. We've built a rather good moat around our niche, and we continue to see very solid demand, virtually no supply, and all-time high rents, and also very, very high occupancy. So we've been in very good shape. We had a great year last year, and we're on track to have a tremendous year this year.
And you're marking a major milestone
we are.
This week, ringing the opening bell to celebrate the 20th anniversary of your company's IPO. What an achievement. Congratulations.
Well, thank you very much. We do that this morning.
Well, from one real estate person to another, what's the secret to having the stability and prospering right now in a time where there's a lot of upheaval in our industry right now?
Well, I think the fundamental core is great people, people who have passion, and solving tough problems. And so we're very focused on solving healthcare issues as well as hunger issues. So our platform is to provide the infrastructure for life-changing innovation for technology and life science firms. So that's a great place to be today.
How do you do that? Explain some of the properties.
So we have in New York City, under Mayor Bloomberg, we took a site on the east side between Bellevue and NYU, about 4 acres. It was a contaminated laundry site, amazingly enough, right on the FDR with beautiful views of the East River. And we took that back in 2007 and built through the downturn, through the decline of Lehman. We built our first building. We brought in Eli Lilly, who had never done research in New York City. They moved now their oncology headquarters to our building. They've put out 3 marketed oncology products out of that building, which is I think a great of significance. Pfizer does research in that building, and a number of biotech firms. We also built a West Tower, so total we have about 750,000 square feet, 100% leased, and we're on track to develop a 3rd building somewhere between 400,000 and 500,000 square feet as well. So New York City, the campus is amazing. We've provided Tom Colicchio as a great restaurant, both a serve and a grab and go. We have the largest urban garden there and an amazing sports facilities. That's a great place to recruit and retain the millennial workforce and really the high quality PhDs that you have here in New York.
That is incredible. I mean, you've been able to see real growth at the company. Obviously, the stock price has done incredibly well by following these trends or leading these trends, really. And one of the most important trends right now in terms of real estate is this healthcare focus.
Yes. In fact, I think one of the things I made comment not too long ago in 2004 and 5, we have a 13-person firm or group in our firm that does just research. We saw a big urbanization trend among a number of our clients, big pharmas wanting to get out of isolated silos, many of which are in New Jersey, unfortunately, and wanting to come to the city to be able to walk or take a quick cab to the major institutions here. And so we've seen that phenomena big time in Cambridge, in San Francisco, here in New York City, and a lot of startups kind of bubbling to the surface. So that several of the factors have really combined to be very, very positive for us. So we saw that about a decade before it happened.
And real quick on your guidance going forward, how do you keep this going?
Well, what's nice is we had a great year last year. This year we have given guidance about 9% earnings plus dividend, about 12%. And we have a 5-year pipeline, Maria, going forward. So for the next 5 years, on balance sheet, we can produce great projects in all the major clusters without going out and adding to it. So that's pretty unusual for a real estate company these days.
So really great story, Joel. Good for you. Congratulations.
Well, thank you, and it's an honor to be here as always.
We love having you. We're happy to be able to follow the trends and you updating us from time to time coming on the program. Not many companies have been able to beat the performance of a Microsoft, of a Berkshire Hathaway, but Alexandria has.
Yeah, I look at Amazon, though, with 63,000% is pretty amazing.
Okay, so you've got Amazon in your sights now. That's your next part of it, I guess. Joel Marcus, good to have you on the program.
Thank you so much.
Thank you so much,
real pleasure.
CEO of Alexandria, and we'll be watching you ring that opening bell this morning.
Thank you.